Ladies and gentlemen, Gatekeep here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 1.7% there on the S&P. Market was down as much as 2.2%. I think earlier today bounced a little bit. Closed the day about 1.7% negative. You can see the Nasdaq is down 2%. Pretty much, bloody red day all across the board, as you can see right here. S&P semiconductors down 2.5%, Dow 2%, Russell 2000. I don't think we've seen a down day like this in a while. Maybe earlier this year. I think this is the first time we're seeing some big bloody red day where all the indices, all the sectors are down like close to 2 to 3%, right? And keep in mind though, when the market is coming down, people tend to act a little bit more panicky because people are exiting in fear and panic. And when the market goes up, it's gonna, it's gonna go by inch, little by little. It's gonna march higher ever so slightly, which creates that suspense. He's like, oh my God, we're gonna see these 2-3% declines. This is why you wanna continue to not be intimate with the short-term fluctuations so that you don't become victims of this market bullying you around. Transport is down 0.7%, banks down 2.3%, energy got hit 3%, biotech also got hit 2%. Healthcare, relatively speaking, and utilities, relatively speaking, is holding up much better than all other indices, right? Healthcare is down 1%, home builders down 1.7%, retail is down 1.7%, similar to some of these other sectors there. Emerging market did get hit 2.7% negative. Bitcoin also got hit there, 8% negative. Gold up a little bit. Silver and miners down though. Dollars flat today while the equities are down. Oil down 1.4%. Treasury bond up 1.2% there. VIX popped 23% positive today. I think this is the first time we saw VIX popping 20% or more. I don't know the last time we've seen anything like that this year. So definitely today was the day where we did see some bloody day. We haven't seen anything like that in a while. And so that does not mean the long-term trend is dismantled now. This is a topping pattern. The whole thing is going to go to nothing. We're going to have another crash like COVID, and we're going to go back and get into a bear market or recession or Great Depression. None of those. We don't have any kind of evidence. We want to continue to stick with our long-term outlook. And the trend is up in the big picture. We're just dealing with 5% correction. 5%, and yet everybody's free. You know what's the funny thing about most people? They will miss out. Like, seriously, most people will miss out like 50, 70, 100% runs to the upside, but they'll start panicking in fear with just couple percentage or even 3 to 5% decline. 3 to 5% decline, we cannot even call that a correction. This is just normal market fluctuations. Any given day of the week, regardless of technical reasons or fundamental reasons, for any reasons at all, for no reasons at all, market will fluctuate around 5, 6, 7% any day of the week. So I'm really not going to call this any kind of a, really topping type of signal. It's just normal fluctations with a little bit more spice to it today, just because we saw bigger gap down. We got a little bit more 2-3 percenters in some of these sectors. We haven't seen anything like that. The market really plays that complacency. Everybody's really spoiled. Market has been really lethargic. So when we see like 2% down there, everyone's just freaking out, right? So anyway, let's talk about this. Market is down in the short term. There's no doubt about that. In the short term, obviously, we talked about this even last week also. Market had a chance to, turn things over right here. Once it failed and created lower low, things got really, really hectic for the buyers, especially the gap was open. Remember, this gap should have been filled. Once this gap stays open, the more hectic it's going to be. Well, we opened up another gap, and then you see that my short-term moving average continue to move to the downside again. Last week, I think like Thursday, I think they really had that chance. And then with the Friday move and the Monday move, basically at this point, people are panicking. All these people are, you know what I mean, hitting that exit button and just bailing, right? These are short-term traders, right? They're just bailing on these trades, freaking out right now. And so you see these gap downs there. But again, market is correcting about 5% decline so far. So what can we say about this market after this kind of decline we've seen about 2 weeks now? Can we still give benefit of the doubt? Well, I'm going to zoom out of this chart later on, but in the short term, you know, we've been giving it the benefit of the doubt. Goes to sellers with these lower highs and lower lows, with my short-term moving average continues to have that trajectory to the downside. My midterm moving average, however, is currently moving sideways, no longer moving up here. So last couple days or so, we start to curl down a little bit. So in the midterm, things are looking a bit hectic there. My longer term moving average finally got hit. And what happened was that this gap just got filled here. There was this gap. That gap got filled. It overshot it though. I think bears got super excited. And so what happened was once that gap got filled right here, it overshot it a little bit. People are just, bears getting overly excited and the bulls are just panicking, basically just bailing. And what happens? What happens is market will push the right button, make sure you get out, and then you'll give you something like this. So we do have a bullish engulfing candle after the gap got filled. And then finally, for the first time this entire year, retesting that long-term moving average on my 65-minute chart. This is the first time this entire year. So we see that dip buyers did come in, pretty long bullish candle there. It pretty much engulfed last 3 hours of trading, or the downturn candles, right? You see that one candle is pretty much engulfed this guy, that guy, that guy. It's a pretty strong candle there. But for like any other candlestick patterns or analysis, we need a follow through. One day move doesn't do much. We need to see a follow through at least tomorrow. And you see that big gap right here, this gap. So you can see there's that breakaway gap, continuation gap, another continuation gap. What bulls need to do, obviously, fill this gap to kind of neutralize the threat there. Bears been really, just monetizing by these gaps not being filled, right? And so with that, just another big gap down today. And then all throughout the day, market has been down, but last hour looks like some brave bulls bought that dip and see that bullish engulfing. Let's zoom out a little bit, kind of see overall trend here. You know what I mean? So at some point though, I'm gonna go back. I know I used to do these daily the weekend analysis for you guys on the weekends, where I look at like a big picture analysis. I know I haven't done that this summer. At some point I'm gonna bring it back. I'm not sure if it's gonna be this month. At some point I will, and then we'll look at the big picture. So it's kind of hard to look at the long-term perspective looking at 65-minute chart. So I might bring it back at some point. I just been busy with other things. But anyway, we've seen these kind of, and this is definitely a biggest one. I think this one is what? About 4.3, and this is a 5.5, so we are seeing a bigger decline. But just looking at the overall trend though, could we agree that this right here is still higher than this guy, right? So if we do see if we do see this thing getting up here and doing if we do see something like that, can we agree that that could still be labeled and categorized as a higher low? Yes or no? Yes, we can see right here. And some of you might argue, okay, we got the lower low here. I mean, how can you forget about this low? You could just, this is low and that's lower low. How come you don't talk about that? Well, we had that lower low. How come you never talk to me about that? We got the low and lower low. So what we have to understand is these are, we got the short term, we got the midterm, we got the long term implication of these cultivations of higher lows and higher highs, right? Obviously looking at 65-minute chart, when I say long term, I mean long term within this time frame of 65-minute chart, right? If I go daily chart, I can really look at the long term going all the way back to COVID lows. So when I say long term, it's relative to this 65-minute chart. Keep in mind. So yes, there's a lower low here. There was a lower low here. There's a lower low here. Yes, looking at things short to midterm, those were the low. Those are the lower lows. Those were the lower lows. But looking at things more mid to long term, we all agree that this still is the level of potential higher low. And this is how bulls stay alive. This is how bulls stayed alive this entire year. While everybody else freaks out every single correction. This is how the long-term investors and position traders benefited from this entire year's move. Only people who benefited from this move this entire year are the position traders and the long-term investors, because market has been so lethargic, right? This is why you have to understand not only the short-term, mid-term, long-term, primary, right, the macro, all of that. So, you know what? We have to see a follow through. This candle itself is not enough. Let's check out an oscillator and see if we can extract any more information. So you can see that oscillator. I'm going to kind of zoom out here. This is the first time. If I go all the way back to like April, right? You can see that April here. If I go all the way back to April, you can see that we haven't seen where oscillator crosses up and gets to halfway and then come all the way back down, right? That hasn't happened. Usually when oscillator crosses up, it goes all the way to the top of his band. It doesn't come back down at the middle of the road. So I don't want you to look at this and say, you know what, look at that. Technical analysis doesn't work. See, this is a rare occurrence. If you were able to kind of capture all this move here, right? Then you understand once in a while we'll have this is what I call shenanigans, just to, shake people out. And definitely today's move is where it shook a lot of people out. Again, especially if you're too intimate with the short-term fluctuations. But keep in mind though, we are at extremely oversold. This is a historical low. So if I zoom out here or zoom in here, you can see we do see a cross after that, bullish engulfing candle we saw here, but that little cross isn't enough. We're gonna have to see a separation and advancement, and then as obviously at some point we want to get above this level. I'm gonna call this oscillator neckline there. So you can see we're at an extreme oversold, looking at 65 minutes per my oscillator. We haven't got there. We didn't get there here. We didn't get it here. This was even pretty oversold, but even then, you can see there's a little bit of right here. You can see there's a little bit of space that tells us that this is lower. This is low. So we're at extreme oversold, and that's probably what this was, extreme oversold bounce. So can we turn this extreme oversold bounce into a cultivation? Ultimately, maybe, filling this gap. That's what bulls need to do. Fill this gap. Kill that momentum. Bears, you want to see more downside price action. Well, keep this gap open. Maybe even use this midterm moving average as resistance and continue lower and continue to cultivate lower lows and lower highs. Even if the bulls go up and fill the gap, because bears already got these two up down gaps still remaining, threat is still there. Ultimately, if you want a bulls to completely, change this thing around, ultimately got to get up here and fill this gap and use the short-term moving average to, surf it up. But if not, if we see some of these moving average acting as resistance, things could get hacked here. So let's see how the market plays out. Obviously, maybe some of you guys still wondering, well, okay, are you still bullish in the long term? Yes, I am still bullish in the long term. We're just seeing short-term fluctuation. That does not mean market can't go lower, because we haven't seen a real correction this entire year on the S&P. We did see it on other indices and other sectors, but not on the S&P specifically. So we may see maybe more drawdown after a little bit oversold move and come back down, make lower and lower. That's also a possibility. So we should be open-minded for possibility of that and embrace. If you're a long-term investor, you should embrace this pullback, because after a certain type of correction, more liquidity will be available, more people, there will be more stocks that are cheaper now, people are willing to buy. We might see a further up move towards the end of this year. So corrections are a good thing for the long-term investors. It provides and cultivates that higher low, and that uptrend can be established much stronger. So again, let's see how the market plays out. it's very simple objective for buyers. Fill this gap. Bears, don't let bulls fill this gap. Don't let it. Make sure this gap remains open. As long as this gap open, things will be hectic for the buyers. So going into tomorrow, short-term benefit of the doubt goes to sellers. Micro-term, if we do see a follow-through, there might be a chance we might see micro-term bullishness and fill this gap. If we do see a follow-through first 2 hours, in the mid-term, I am a little bit more neutral to maybe slightly bearish as of today. That could change if this gap gets filled. I'll do more analysis tomorrow. There's a lot to talk about. I just don't want to go too long. I'll come back for you tomorrow. We'll re-examine, we'll reassess the situation. We'll go from there. Enjoy your evening. Good luck trading tomorrow.